Procter & Gamble is known for its stability. For a century, the company has been churning out products found in kitchens and bathrooms, from laundry detergent in Ohio to baby diapers in Beijing. The 180-year-old P&G fortress is facing one of its biggest tests yet. Nelson Peltz, an activist investor and co-founder of Trian Partners, who's taken on other big companies such as Heinz, has set his sights on P&G. Arguing P&G was too slow to adapt to changing consumer tastes, he asked for a board seat. This fueled what was estimated to be the largest, most expensive proxy battle on record, with Peltz likened to a knight trying to infiltrate a company worth $200 billion. So how did P&G get to this point?
For many, many years, they've tried to convince consumers to pay more for a product over and over and over again. And these are in products that consumers don't necessarily want to pay more for. And so you've gotten to the point where their price gaps relative to their peer group is very, very high. So, Tide is double the price point of the average laundry detergent. Is that worth it for the consumer? Those are some decisions that consumers are making, and disproportionately for P&G's products, the consumer over the past several years has been saying, no, it's not worth it.
We are here in a pretty normal supermarket in downtown New York and wanted to show you what the cleaning aisle looks like here in 2017. So as you can see, there's a lot of P&G products. Tide is kind of dominating the shelf here. And it's this big iconic brand, been around for decades. Everyone knows what this looks like. But what's been happening in recent years is a lot of these smaller brands have taken up more space and become more popular. So you have right next to Tide, their 7th generation, which is this eco-friendly, organic, small brand made in Vermont. I mean, the common thing you'll see with them is a lot of them are biodegradable, safer for the environment. Another popular one is Mrs. Meyer's. It's, again, another smaller brand, and these companies have been stealing market share from the big P&G brands for several years now.
The smaller brands are the brands that sing more to the consumer. The consumer wants to see things that are more eco-friendly, more biodegradable, or have a particular purpose in mind. And they want consumers these days want more customized brands. Large brands, by definition, are very difficult to customize.
P&G's powerful brands have been losing market share for a decade. Sales have dropped for the past 3 years. People can buy toothpaste on Amazon and watch videos on YouTube instead of watching a TV set, making them harder for P&G to reach with advertising. All of this has helped smaller brands, which can change their products faster and easier than a giant like P&G. These piranha brands, as consultant A.T. Kearney has dubbed them, have been stealing customers from the incumbents, growing by up to 20% last year, while the big brands grew at best by 2 to 3%.
I think Peltz sees Procter & Gamble as a company that has a lot of potential. They've got a great reputation, they've got great brands. I think one of Peltz's main points is that P&G hasn't had a new product that they have created in nearly 19 years. So that's a huge problem. They need to either acquire more companies, more sort of like upcoming brands that are going to resonate with millennials and sort of a newer type of consumer, or they need to come up with more innovative products on their own.
The battle is not over. Last month, it appeared P&G had fought off Peltz. The company claimed shareholders denied him a seat by a thin margin at its annual meeting. But in a stunning reversal, a recount showed Mr. Peltz had pulled ahead by 0.002%. The final results are still to come. There are broad implications for what this means for other activists.
Trian has actually had more success than a lot of the activist investors in terms of targeting the biggest companies. They just got a board seat at GE. They went after DuPont, and even though they lost a proxy fight against DuPont, they didn't get a board seat. They ended up having a lot of success with the company in the long run. They helped, DuPont enter into merger talks with Dow. They look at that as a success in the long run. So I think that has emboldened Trian and other activists as well.
For now, the message from investors is clear. Mr. Peltz's questions will not go away. The company unveiled weaker than expected sales in quarterly earnings last month, telling investors on a call that the operative word has been sluggish, but it still expects sales to pick up in the future. Anna Nicolau, Financial Times, New York.